Hi, and welcome to the ZeroTax Zone Podcast with Andrej Kandus, your host. Tax savings and structuring is a very sensitive topic, and unfortunately one that is mostly ignored until it is too late. That's why Andrej decided to launch ZeroTax Zone Podcast. So let's jump in. What can you expect from this podcast? Well, each week we bring you cutting-edge insights and advanced strategies designed to help maximize your deductions and save on taxes like never before. With over 40 years of combined experience from our expert tax advocates, we're here to guide you through the complex world of taxation, ensuring you maximize your savings and minimize your stress.
With our expert guests and in-depth discussions, we will empower you to take control of your tax situation.
Each tax situation is very unique, and I know it really all sounds so complicated, and you find yourself wondering if this is really for you, or if you can actually save anything significant, right?
Well, join us as we explore the latest trends, real-life scenarios, share innovative techniques, and answer your pressing tax questions. Whether you're a business owner, investor, high-income earner, or simply looking to make the most of your finances, the ZeroTax Zone is your weekly resource for transforming tax challenges into opportunities. Get ready to take your tax game to the next level. Keep more of your hard-earned money and untax yourself with ZeroTax Zone. Welcome to this week's episode of ZeroTax Zone.
In this country, there's really two tax systems. One is for the informed and one is for the uninformed. So the question is, which one are you? Well, you're probably the uninformed. But what I'm going to do here is I'm going to make you informed. So what can you really do with these tax strategies? It is, if you're making enough money to be in a tax bracket that is higher than 20%, you're really going to benefit. Because most of the time with the tax strategies that we're able to develop, you're never going to pay more than 20% tax. So let's say if you're in a 40% tax bracket, you may be able to save everything between 20 and 40. And that's a good chunk of money if you're making a lot of money. Now the question is, why doesn't your CPA tell you all this? I mean, what makes us different? What makes me different? Why am I better at this? Well, the reality is that your CPA is kind of like a general practitioner doctor. You know, you just have a limited amount of time, capacity, and just ability to do everything else besides the actual compliance stuff that a CPA will do. So it really is it's too much to expect from your CPA to really dive into advanced tax strategies. So anyway, today I'm going to cover on a very high level. I'm always going to be covering strategies on a very high level because we don't have the time on this podcast to go deeper. But I'll try to give you enough of a glimpse of each strategy so you'll understand and kind of be able to gauge if this is something that is useful for you. Now, today I'm going to cover a strategy that I call a co-donation strategy. This strategy is based on the charitable giving rules, and maybe you know, maybe you don't, but in the US, one can donate to charity up to 30% of their adjusted gross income if they're donating an asset, such as a boat or a car or any other asset. Or they can deduct up to 60% of your adjusted gross income, that is your taxable income, if you're donating cash. Now, this strategy that I'm going to talk about today is based on a cash-based donation. A cash-based donation, now you'd say, well, yeah, sure, I can donate 60% of my AGI, but I really don't have that much money, or I don't want to donate that much out of my own pocket. Now, what we've put together is an option to team up with a large foundation that is donating money to charity with or without you. But if you team up with them, a possible arrangement is that you basically contribute a smaller part, let's say 20%, and they donate 80% in a combined donation, but you get the credit of donating the 100%, which means that for a 20% contribution, you're getting a 100% deduction. That is a 5-to-1 ratio, which means 20 versus 100, that is 5-to-1, which means that if you're in a 40% tax bracket, you would have paid 40% on this part of the deduction, but now you're just paying 20% because that's the part that you're actually out of pocket donating to the charity. So bottom line, you're able to actually save all taxes above 20% for the part that you're participating in this large cash donation. So there's much more to obviously this strategy and all other strategies that we're going to be discussing. And I really, first of all, we don't have the time, and we don't have it wouldn't make sense to go into too much detail because it may become too technical. But I would like to encourage you, if you feel that you may benefit from this strategy, this is the time of the year. The time is of the essence, because we're getting into the last stretch of the year, and there's still potentially time to execute these types of strategies for this tax year. So if you feel that you're going to be in a higher tax bracket and a much higher tax bracket than 20%, do not hesitate to get in touch with us. Look at the phone number or the email on the bottom of the screen, and don't hesitate. Get in touch with us as soon as possible. We may be able to help you. I hope this little glimpse into one of the strategies got you interested and curious. And I'll make sure that every time that we meet on this podcast, I provide something very interesting and useful for people for you guys who can use these strategies to reduce your taxes. See you next time.
Thank you for listening. We hope you enjoyed our podcast. We will have a weekly podcast covering everything tax related that will help you not only grow, but exceed your tax savings. Looking forward to seeing you soon.